Alright, good morning, welcome back everybody. It's episode 3 of Backtesting with a Purpose. Today we are on December 20th, making our way up to current price action. And we're just going to jump right into it and get started. Let me go to the 15-minute real quick. And we'll put our markups on the chart here. Okay, checking the calendar, we don't really have anything for today. Let's see what's going on for tomorrow. On the 21st, Wednesday. It's a pretty uneventful week. On Friday we've got core PCE price index. But other than that, it's pretty mellow. Then we'll just do a quick high time frame check. Looks like we're setting up for some sort of short-term retracement. Okay, let's go ahead and play out London session and see what we get. I'm still a little bit tired, y'all. I'm so sorry. I have this on 10:30 instead of 8:30 for some reason. But at least we know what's going to happen, which kind of sucks. I wanted to go in blank, but let's find us a setup here. Sorry about that, y'all. Our first clue, though, is the higher time frame that we looked at. That retracement that we were expecting looks like that's happening on the lower time frame. And then for London, we're below midnight open. And when we went below midnight open, we took sell side liquidity. And we're jamming into a fair value gap over here. If we go up to the 1 hour, I imagine we come down into a 1 hour. Yeah, right there. So this little fair value gap right here. Let me mark this out. This sell side's been taken. I hope the mouse is a lot quieter. The one I've been using previously is just so fucking loud. It's just super annoying. As you can tell, I probably sound pretty tired. I didn't get much sleep last night. honestly. But that's part of it. You get up and you do your daily routine. I went outside today, did my walk, even when you don't want to, you know. Now, we saw what was going to happen, unfortunately. But if we can get a return to this breaker, that'd be great. Let's go down to the 5 minute, actually. Here's a 5 minute, the fair value gap is what I meant to say. I always confuse those with breakers when I'm speaking for some reason. But here's a breaker here, the actual breaker. So that's a proximity array. I don't imagine it's going to come back down to that. It might, but it seems like it's taken off already. In which case we could probably find something off of this here, the parent breaker. And it would even be proper to enter at the bottom of this on the way up if we get the chance. It looks like it might just blast through first, but we'll see. So that's what I've got pre-equity open. Let's go right up to equity open and see what happens. Okay, so you got an entry right there, pre-equity open. But of course we're going to wait. It could even go and tap midnight open one more time. Perhaps. It's possible. Yeah, right there. Okay, so that would have been a valid entry, the midnight open into one of these fair value gaps over here. Let's go up to the 3 minute, see if we get something clearer. So we've got an internal liquidity grab after an external liquidity grab in London. We've come down to this area here. What we could do is take a close proximity entry. Or we can even go down to the 30-second. And see if there's something we could launch off of. So we have the option of entering here or waiting for it to touch that breaker one more time. I tend to think it's just going to launch, but let's see if we can catch something. Yeah. Okay, so we'd enter here with a chance that it could sweep down below initial. Like perhaps touch this sell side one more time. Let's stick with the fair value gap entry if we can find one. Yeah, good thing we did that. So there's a swing high setup right there. If we can breach this swing high here. Right there's the entry. Right there. At the breaker that's been reclaimed. So let me show you the lower time frame model here. I'll get rid of this. And just keep in mind we're on the 30-second chart, right? So this stuff is possible in the lower time frames. Below midnight open, higher time frames suggest a retracement. We had some sort of indication that we were taking sell side on London. We took sell side liquidity. In fact, we can keep that on here. We took the London purge. It's always nice to see a higher time frame combined with a lower time frame liquidity grab. And of course this is BSL. Remember the liquidity grab, the swing high or the swing low prior to that run into the liquidity is really where you want to focus for break and market structure. That's the ideal break. Okay, let's rewind this a little bit to our pre-entry. Okay, so we let that candle close, and now we have our fair value gap. See if that's even on the 1 minute. No, that's the 30-second only. Okay, so honestly, we did see that it was going to go up. I had the equity line set for 10 o'clock instead of 8:30 for some reason when we first played that out. But you saw before we did that, we had a bias of bullish bias, if you will, a short-term bullish bias on the daily, so that it can go up and seek the SIBIs on the 4-hour and the SIBI on the daily. So let's take our before screenshot. So on the 15-minute, you had a sell side grab in London. Equity comes back down one more time, grabs the London sell side. And so we drop down to a lower chart because we weren't seeing any fair value gaps in the 1 minute. And we're on the 30-second, and we have our model play out. You got sell side, break in market structure here. Fair value gap setup. Near breaker, we don't expect it to come very far down. At the most, it should come down to midnight open, perhaps. But once it's dipped below and it's taking off, it typically doesn't retrace that much. Also, you have, if you notice, you've got this liquidity void here that could be setting up to be balanced. So let's take, I think we took our screenshot already. Let's put our entry on. Nothing fancy, we're going to stick with the premium line. We're not trying to catch the middle on this one, like the consequent encroachment. Even if it does come down, that's fine. Stop loss below the candle that forms the bottom of the fair value gap. Because it's a 30-second, we definitely want to kind of be careful. So let's do our full 25 stop. takes us below this liquidity void here and below the sell side that was originally taken on the 30-second. In fact, we could probably be a little bit safer and go 28. Okay. This breaker is an FTA, so it could be like our first trouble area where we'd see a retracement from, a short-term retracement. But for the purposes here, let's take that off. We'll go up to the 15-minute. So we can see this trend line liquidity here, retail trend line liquidity. First target could be 11.53, and then you've got this here. This is an absolutely juicy area. This right here. So let me go down to the 1 minute. We'll pull up our target here. When we get about halfway through, like above this here, we'd probably want to take partials, maybe like up into this little block. And if we go one more time back up to the 4 hour, our ultimate target could be something around here. Look, these nearly equal highs. Let's see, what is this? 250, 382. It's like 100 something points. So we'd leave a runner on for the ultimate buy side, which is these equal highs near the 4 hour SIBI. Let's just call that a target. Come back down to our 30 seconds. Okay, and now we're ready to play this out for a little bit and then take our during screenshot. Bam, there's your entry. It should run away. Little bit of heat and it's gone. Retouch the breaker. Now we should trend upwards. Okay, that's far enough that we would be safe to look at our quality parameters here. So let's go into this. Oops, sorry about that. There we go. All right, let's go ahead and mark this out. December 20th. Post equity entry. Liquidity grab was external overnight, but we also, for our entry purposes, we had to work off of an internal liquidity grab. Displacement was less than 60 points on the 30-second chart. Stop loss was more than 25 points, so it's about 28, which is not bad. We took some significant drawdown, but we'll get to that later because we want to mark out the stuff that we would know before the entry actually plays out. Price action is average. It's not necessarily clean. I'd call it average. And there was one fair value gap at entry. That was nice. And then we had a breaker proximity array on the 15-minute. So let's go look at our quality and see what we would have taken for position size. I went through all this stuff on the first and second episodes. If you need a refresher, you can take a look at those. But basically what we're doing is we're grading the quality of the parameters of the setup. So was it a post-equity entry? Yeah. Did we have an external liquidity grab? Technically, yes, over London, so we'll say yes. Was there more than 60 points displacement for our setup? No, there was not. So we're going to put that no. Less than 25 point stop loss in a safe area? No, we couldn't do it safely, so that's a no. And was there one fair value gap at entry? Yes, there was. So that's 3 out of 5. We're looking at a B plus here, which means we can risk anywhere from 1.5 to 2%. We had a pretty clear higher time frame bias, so let's just call it 2%. And we'll go ahead and put a grade on this, B plus, 2%. So that means our risk is $2,000 on a $100,000 account. We're just going to say we had a $100,000 FTMO account or funded account. Let me pull up my calculator real quick. And so that's 2,000 divided by a 28 point stop loss. Let's call it 30 for even math. Divided by 30. That means we can take approximately 66 contracts or 66 lot size. So that's great. We would reduce our risk here once we've moved away from our entry area. And let's take a during screenshot. Great, we've got that. Let me pull this down so you can actually see what we're doing here. See if I can get it a little bit lower. There we go. Okay, so we're shooting for this 96, let's just call it 100. That puts us at a big figure. If you look over here, 11,200, it's likely to come up there at the very least. That's only 46 points away, so it's almost guaranteed to get there today. So yeah, let's play that out and see how far we get. Quite a bit of a retracement there, which can always be pretty scary. And there's our target right there. Okay, and that, let's come up to the 5 minutes so we can calculate how long that took. Let's see if I can make this go to the back. There we go. So notice that retracement was just a retest of this breaker area here. And then, let's see. We can calculate our drawdown after we figure out what the trade duration was. So we entered on this candle. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50. So 50 minutes. Let's pull this bad boy up here. Trade duration was over 30 minutes. And we took 100 points. Which is great. That's always a nice bag there. At a 66 position size, 66 lot. So 66 times 100, 6,600. That's not bad for the day at all. Nice. Okay, and we would likely leave a runner on if we'll come back up to the 4 hour. We'll leave a runner on for another 100 points or so. And it may not get there this day. That's actually 142. That's great. Let's see if it actually does, though. I'm gonna be super careful about not running into the next day, so that we don't get a preview of price action. Looks like we're doing that already. So yeah, so you'd leave a runner on if you wanted to and expect it to at least come above these nearly equal highs on the 1 hour chart, and then these equal highs with the 4 hour SIBI over here. But all in all, that was a great day. It was a little crazy and some scary retracements, but we made it work. And we had to drop down to the 30-second to catch an entry, which happens sometimes. All right, it's not a big deal. And if you notice in my other live stream when I was doing my FTMO challenge, you'll see me on the 30-second all the time. Okay, let's go back down to the 1 minute. And we'll take our after screenshot. And I think we also need to calculate our drawdown, don't we? So we entered at the top of this fair value gap, and we took about 13 points of drawdown. That's significant, right? I mean, if you've got 66 contracts on, I mean, you're almost 1,000 in drawdown at one point in the position, and then you saw it come retrace back to tap that breaker. That was also, I mean, in live price action, that's always scary, but you got to trust the setup. And if you get stopped out, accept the loss. If you have a reason to re-enter, then do so. And if not, you got to walk away from your computer and don't try to jump back in. I mean, whether that's until the next session, like the afternoon session, you can catch something to make up your loss. Or typically you want to wait till the next equity open, which is really, really fucking hard to do. It feels fucking bad. But as you progress as a trader, you'll learn that patience. And one of the biggest powerhouse tools that you can use to improve your trading is learn how to walk away after a loss. That took me fucking years to learn, and I would struggle so bad with like the feeling of needing to get the loss back. That just comes down to psychology and not accepting the loss potential risk beforehand. And you've got to get over that. So, and once you do, you'll become consistently profitable. So I think we had, what was it, 13? So drawdown was over 10 points on a B plus setup, risking 2%. We still walked away with 6,600 and probably left a runner if we felt like it for another 150 points or so. Okay, let's do one more. I'm going to try to keep these a little shorter than usual. I've noticed the average watch time is 30 minutes. I'm sure you guys are pretty busy. Not everybody can watch these for an hour. So let's see how quickly we can get another one in the bag. So first step, we're going to come over and check the next day's price action. We don't really have anything for USD other than consumer confidence at 9 o'clock, which is 8 a.m. my time. So that's 30 minutes before equity open. We could see some sort of pre-entry aggressive movement, but let's just see what we get. So now we come to 15 minute. Let's leave the ultimate objective on, the buy side objective, since we haven't reached it yet. And we can get rid of all this stuff here. Except for maybe midnight open. Pull this down for you guys. I'll try to remember to do that. And so what I've done is I've just cleared everything off except for the things that we need, which is the midnight open and the equity open. Slide those bad boys over. There we go. this out. Bam. Okay. Let's mark out our midnight open price. Also, we'll go to the 1 hour and see if there's any, there's not really any fair value gaps floating around except for this guy right here. Got some sell side liquidity down here. Other than that, it looks like a retail trend line liquidity on the top side that should be broken. Could possibly get a return down here. I don't know. It's pretty far away, it seems like. Not quite. It's only 50 points. So let's see what London does. We'll come back down to the 15-minute. Okay, here we go. Excuse me. Come up to the daily real quick. Let's see what we got for the day candle. Okay, yeah. Get some sort of bounce off of here, potentially. You know what, I don't really think it's going to make it up to the 11,380, honestly. I could just leave that open. So we'll take that off just in case it does. We can always put that back on. Four-hour looks ripe to come down a little bit, so we got to really be careful. And also remember, we've got that news 30 minutes before the equity open. You're not going to find a setup every day, y'all. And don't try to force it. That's just part of it. You're going to take losses, even in back testing. I mean, it's just not going to be 100%. If you try to make it 100%, you're gonna have a bad time when you go live. Okay, enough talk. Let's see what happens here. Look at that early move down to where I was thinking. Could actually be shooting for this potentially. And that run is 285, 83. That's a 100-point run already. If you're a London session trader, you've got a setup here. So you've got buy side taken. They took buy side, these two nearly equal highs. Back up into what could be a rejection block here. So return to rejection block. Break in market structure right here. Remember, the break in market structure, you always want to focus on the swing low or the swing high before the liquidity grab. Like that. And then also this is a breaker. So if you're trading during London, you had a valid retracement back up into that. And then of course, if you miss that, you have an opportunity here to get back in on this, into this order block with a fair value gap. When the arrays combine together, that's great. You'll love to see that. Again, you have another entry here, so I imagine that the news will continue down for a while, just from what we're seeing. It could always, this could just be like a swing low forming and it could retrace, but the odds are that it's going to continue downwards for something like this here. Let's see if that's the case. Well, that was definitely the case, right? So now what we have here is before equity open, we've got over 200 points of movement. Well, I think what Yeah, essentially. There's this juicy low here. So there is no entry for equity open. I mean, I wouldn't say it that way. I would say there's no entry that we would want to take. But if you were lucky enough to be a London trader, you definitely caught something. I mean, I don't know that you would have held for all of this, but you caught something. Let's just see what happens at equity open. I mean, yeah, if you're aggressive and you're gambling, basically, you could have taken this fair value gap here. Sibby, I suppose, if it's big enough. But look at this day, my God. The majority of the daily range, if not all the daily, yeah, all the daily range has already been played before and right out equity open, so you're not going to take a trade today. If you want to stay consistent, you got to follow rules like that. So that's fine. We got a little bit of time, so let's see if we can do one more day. Okay, let's go to the next day. And we were right that it's not coming up for the ultimate buy side objective. At least not yet. And remember, we're in December, right? So it's not going to be as clean as other months. In fact, it gets extremely choppy and volatile, particularly as we approach the holidays and the new year, of course. Let's go back up to here. Pull this bad boy down so you can see what I'm doing. Okay, so the next day there's consumer confidence again at 8 p.m. or excuse me, 8 a.m. So that's 30 minutes before equity open. We want to be on the lookout for early moves like we saw here. If you were a London trader, you had a great session. But we focus on equity, open, and New York sessions, so we're not going to be doing that. Looks like we had a return up into a fair value, or a SIBI here. Yeah, that's a SIBI. And then we've got some equal looking highs. But it looks like it's done its business already. Let's see what happens. Again, we've got news, so let's mark that out. Midnight open. We'll get our price in here. Open price. Right there. CB consumer confidence. Pop on up to the daily one more time and see what the daily structure looks like. Not very clear on the daily. It could, you've got like this small fair value gap here. with the order block. Could see a return up to the order block, or it could just continue shitting and take these equal lows here. I tend to favor the downside, so I'll be looking for shorts more than anything if we do get something post-equity. Let's play this out and see what happens. Oh, look at that shit right there, man. Alright, so both sides of London have been cleared. This is a 162-point move, and we haven't even got to the news event yet. So we may have another nothing burger for entries, but let's see. Okay, now it's balanced this range somewhat. And again, remember how we were favoring downside. So here's equity open. Buy side's been taken. This swing low here would be your first break in market structure. The chances that we're confident in taking this are low, right? Because here's the model, if I can show you. We've barely taken, just by like probably a few pips, we've taken buy side here. Or we've taken buy side, we've got sell side taken here, and then a fair value gap. There's a chance, yeah, look how clean that is off the premium of that. So yeah, let's rewind this a little bit. Discount, premium. Let's go to the 1 hour. Okay, so the news, so what we've done here prior to the news is we've created a dealing range, and it looks like we are going to rebalance this range a bit. We have a short-term retracement into a fair value gap after a break in market structure to the downside. And now we're not past this low yet, but we're close to it, so we know that it's going to go for this. However, equity open typically sees a sharp retracement, and we're expecting an internal liquidity grab here. So what that means is it would come up and grab this or something like this up here. So at this point we could, remember the other example I showed you in the last episode where you've got multiple entries like here and here and here and here, pre-equity open into a fair value gap that's already set up. And then what we expect is extreme one-sidedness on equity open, and we would have a sell limit right here. So I'm going to do both examples as if we've caught this, which is, it's actually likely. Looking at the 1 minute, if I was waiting for this, I would have looked at this here, and this order block is sitting inside this region, and as we saw earlier, it actually came up to this block here and this one. But let's go ahead and take a before screenshot. So we've got multiple fair value gaps in the proximity, and again, another indication that we're going for downside besides this obvious target here is pre-news. We took this, and then when the news came out, we didn't have a sharp retracement upwards. We continued in the direction that we thought it would go, And then of course we have a continuation fair value gap setting up here. And we're basically just taking a short off that, a return to that fair value gap. So let's put a position on right here. And we want to put a stop loss above midnight open and above this swing high at the very least, if not this right here. We're already at a 30 something stop loss. Let's just call it 35. A little bit better than a 1-to-1 coming for this obvious target here. So when we're targeting, there's a clear fair value gap down here. So opposing array. If we come down to the consequent encroachment, or even, I'd say like even right there, we're almost at a 2-to-1 risk to reward, or vice versa. So we'll come back down to our 1 minute. Okay, and let's play this out. Bam, there's our entry. And I like the timing of the entry too, because one of the structures for post equity is a 2 to 3 minute retracement. So like 8:30 comes around Central Time, and like 8:31, 8:32 candles will retrace, and then boom, it goes down for the day. In this case, it looks like it went to 8:33 or so. Bam, yeah, and then it's gone, right? So we took some heat on the position, not bad at all. I tend to think we could go a little further down than what we've got currently. And it looks like it shows me the candle in the 15 minutes, so yeah, we were correct in that. Coming down into this here, maybe the consequent encroachment of this we could target. This right here. Okay, let's take our during screenshot. And let's go through what we would have taken for position size. Let's see, there's multiple fair value gaps here before the setup occurred. It's an internal liquidity grab because we've already done the work in the business pre-news, pre-equity. The stealing range here has already been established. Multiple fair value gaps here. There's order blocks on a higher time frame. Let's call it a 5 minute. So post-equity entry, internal liquidity grab, more than 60 points displacement on the overall structure, but less than on our setup. More than 25 point stop loss. Price actions average. Multiple fair value gaps. And there's a 5 minute proximity array. Let's go grade that real quick. Post equity entry, yes. External grab, no. No for displacement over 60. Stop loss, no. And no. So we've got, actually there was more than 60. So we've got a B setup. And on this one, we'd just be risking 1% really because of the uncertainty with the news. Going for 85 points. Okay, so let's play it out and see how long it takes to get to our target. Not long at all. That was nice to see with everything else considered. So we entered on the 832 candle. Target was hit on 836, so less than 5 minutes, which is great. And our drawdown is significant. It was 18 points of drawdown, so that's like, let's see here. Pull up my calculator real quick. So 1% on, so 1,000 divided by 36-point stop loss. We could take a 27 contract or lot size. So 27 times 18. It took about 486, almost $500 of heat. So ultimate target we had was 85 points. We made $2,200 for the day, not bad for a B setup. And let's take our after screenshot here. Okay, I'm going to keep it under an hour for today. We're going to skip the holiday week, or maybe cherry pick something, I guess, for the remainder of this week on the next episode, and then after that we'll be into basically what's called forward testing, which is back testing in a live environment, which is great. You really gain a lot of pattern recognition by doing that. The only problem with it though is we're at the end of the year, so it could get kind of fucking crazy. But I appreciate you guys sticking with it, and thank you for watching. I hope you learned something. If you have questions, feel free to leave them in the comments. I don't ever get any comments. I mean, I've only got like 38 subscribers. I appreciate you guys. Not really doing this to gain a following, but it's nice to see that that's slowly happening. I will promise you I'll never sell out. I'm never going to try to redo ICT stuff. I'm not going to try to sell a course to you. I'm not pitching any signals, right? So if that's what you're here for, you're in the wrong place. If you're here to learn, you're in the right place, and I hope I can help you accelerate your learning curve a bit. I've been doing this for 5 years. I found ICT 2.5, 3 years ago. I've only recently become consistently profitable in my live trading, so a couple years of that, and it's only become meaningful in quite recently, within like the last year or so. So thanks once again for watching. Stay up to date by being a subscriber, and we'll get some new episodes out to you. And I got a lot of stuff planned for the new year. In fact, what we're doing is the FTMO verification phase. We'll start that mid-January, maybe the 3rd week of January, after all the craziness plays out. And yeah, we'll see you next time. Have a good day.